This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The lady is returning. Liz Truss's government scraps a cut to the top rate of income tax. A day after backing the plan, we're live in Birmingham at the Conservative Party conference. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude price surge saps sentiment. Plus, not reassured, Credit Suisse drops to fresh lows as the new chief executive fails to calm the markets. Now, we're getting a bit of breaking news, but I have to say the focus firmly on the pound, on gilts, and exactly what is happening with inflation fighting from central banks. But Euro area September manufacturing coming in at 48.4, so anything below 50 means a contraction, pretty much in line with the preliminary estimate. So the picture overall for European stocks down 1.3%. Treasury yields are falling again. Even U.S. stock future indices are seeing a bit of pressure. There's a lot of concern that some of the hawkish policies put up by central banks around the world are raising the risk of a recession and raising the risk of earnings contraction. The FTSE, now this is a different story. This partly, and I read a great line by Sebastian Boyd on our MLive team saying, look, given the pressure that we saw on UK stocks, maybe now is a buying opportunity. But this is also a story of credibility for the markets or for the government after they reversed that sapping of the 45% tax band. This had implications for pound at currently at 112.04. So it did move pound, but then again, markets are now trying to test the markets, the government's resolve to really pay for the rest of what they promised in that mini budget. And then crude oil, 83.01. We talk about OPEC plus. So the picture overall for the map, I don't think it makes a huge difference, given these are global concerns on whether you're in the UK or Germany. If we have it, there you go. You can see the FTSE down some 1%, the DAX over in Germany down 1.4%. So we're seeing similar moves really in the red across the board. Also this hour, we'll be speaking exclusively with the chairman of Societe Generale. He's Lorenzo Bini Smaghi. So we'll have a lot of questions for him on these markets. But really the main question, if you're a bank chairman, and I know they had a change of leadership at Soc Gen, is what does some of this volatility or also lack of liquidity mean for his banks? Tesla shares falling 5%. So we're seeing a little bit of the market pre-open moves. So Tesla down 5% after it missed estimates for third quarter deliveries. Now, back to our top story. The UK government has scrapped its plans to abolish the top 45% tax rate. This comes after Prime Minister Liz Truss spent the weekend defending her government's economic policies, which triggered a week of market turmoil.
Did you discuss scrapping the top rate with your whole cabinet?
No. No, we didn't. It was a decision that the Chancellor made.
When you have additional billions of pounds in play, to have as your principal decision the headline tax move, cutting tax for the wealthiest, that is a display of the wrong values.
Now we're joined by Elliot Hentoff. He's head of macro policy research at State Street Global Advisors. Elliot, I have a million questions on, we're hearing actually from the Chancellor also blaming market volatility on global events. There was something because of the mini budget that triggered, of course, these concerns of how they're going to fund it. What does the government do next after this U-turn?
Well, first of all, I think the U-turn was expected, at least by many market participants. We thought the government could not hold out against the pressure, the volatility in the marketplace. I think it's important to remind viewers how bad the fundamentals are for the UK. And we're in a different world. We're in a world where rates are rising, things are getting tighter, borrowing costs are rising. So policy mistakes will be punished by markets. This is very different from the past decade.
So what does it mean for growth in the UK? This was meant to be their growth plan. It got lambasted. When you think back of how many gilts the BOE had to buy, this probably could have been avoided.
The growth outlook remains dire. That's the reality. The UK is, with the rest of Europe, is hit by an energy shock. That's going to hit growth. Obviously, it worsens the growth inflation mix. The budget was supposed to alleviate some of that pain, and the energy plan did that. It buffered households, it buffered some corporates in terms of the energy price shock. But there's basically, it's a limited fiscal impulse in terms of growth stimulus.
But Elliot, so you're looking at gilts doing one thing, and actually, sterling stabilizing a little bit. Who's right?
Well, this week sterling's certainly right. Sterling should stabilize. The only reason we had this mega crash was a loss of credibility. So some of that credibility is gradually being rebuilt this week. Yeah. We see some corrective measures in place by the Tory party conference now, kind of restoring some of the consensus as the policy direction. So for now, sterling's right. But again, the fundamentals are poor. The Bank of England has only bad choices in front of it. So downward pressure will persist, and that means also still some upward pressure on gilts.
Elliot, thank you so much. We'll get back, of course, to Elliot Hentoff, Head of Macro Policy Research at State Street Global Advisors. The BOE, only bad choices ahead of it, and of course, this correction course. So for more on all of this, let's get straight to Lizzie Burden, live from the Tory party conference in Birmingham with a guest.
Thank you, Francine. Well, I'm joined here by Chris Philp, the Chief Secretary to the Treasury. Minister, thank you so much for joining me on this very busy morning. The government has just U-turned on its decision to cut the top rate of income tax. The Chancellor says he's listened, that he gets it. Are we to understand that the government wasn't listening, that it didn't get it for 10 days?
Well, look, I think there's a clear economic rationale for removing the top rate to do with international competitiveness and making sure this is a jurisdiction, a country people want to locate in. But obviously there has been an adverse reaction from the public and from members of parliament, and we have listened to that. This is a listening government that is responsive, and we decided this became a distraction from the wider package of growth measures that, of course, see taxes reduced for 30 million working people by an average of £430 each. So we're going to concentrate on those 95% of measures that command widespread support and not let this one thing that was a relatively small part, less than 5% of the total measures by fiscal value. We're going to put that to one side so it's not a distraction and concentrate with on the other 95%.
Of course, and you want to take credit for the other measures in your package. But the Chancellor said it was the Prime Minister's decision to U-turn on the top rate. But other MPs are saying it was your idea to cut the top rate in the first place. Are they correct?
Well, decisions on taxation are made ultimately by the Chancellor and, of course, the Prime Minister and other ministers. Ideas get discussed by a huge number of people. What I think is important is this growth plan taken as a whole will see taxes reduced for everybody in the United Kingdom, rich and poor alike. They'll see infrastructure projects getting sped up. They'll see energy projects getting sped up, so we're not dependent on importing electricity anymore. We're going to see business regulations being reduced. These are measures that have been widely welcomed by businesses, large and small, the British Chambers of Commerce, the Federation of Small Businesses, the CBI, all of whom can see these measures will help their members, British businesses, grow and create more jobs. And that growth will ultimately see higher wages being created, better jobs being created, and also, of course, pay taxes sustainably that will fund our public services into the future.
OK, but to pay for all that, to have any hope of restoring your party's reputation for fiscal credibility, you're going to have to make deep spending cuts. Our analysis at Bloomberg Economics suggests you're going to have to make cuts deeper than when George Osborne was the Chancellor under austerity. But in July, the Prime Minister said, and I'm quoting, "I'm very clear I'm not planning public spending reductions." This is going to be another major U-turn, isn't it?
Well, we've been clear that we are going to be actually sticking to the existing spending envelope. That's the spending review that was set out about a year ago, covering 3 financial years. We're currently in the first of those 3 financial years. We are going to be sticking to those spending plans.
But we've had double-digit inflation since a year ago, so that's a real-term spending cut, isn't it?
Well, it's not actually, because first of all, the old spending plans or the current spending plans, even on the old inflation figures, entailed fairly significant real terms increases. Secondly, the inflation which the public sector experiences is significantly lower than the general inflation figure. So the public sector inflation figure is a lot lower than the 10%, roughly 10% we see across the whole economy. And actually, even sticking to these spending plans, and even with the higher public sector inflation, across that 3-year period, there will still be real terms growth. We are going to need to find efficiencies in order to stick within those targets. We're going to do that. And besides enabling us to stick within those existing spending limits, we're also going to make sure we're prioritising public spending on frontline services, as you'd expect, and also particular projects like expediting road construction that will really help growth.
So if your job is to control departmental spending and you say that you're going to protect spending, assuming you're not going to cut health or defence or pensions, is it going to be benefits cut in a cost of living crisis? Is it going to be infrastructure when you're trying to go for growth?
No, I mean, the benefits question, there's a statutory, a legal process that the DWP Secretary and other ministers go through each year. That will just happen in the normal way. And we are going to be prioritising spending to make sure that we are directing taxpayers' hard-earned money towards frontline public services and towards projects that make growth, more likely and better. That's what we're going to. That prioritisation and efficiency exercise is one that we're going to be going through this autumn.
Now, the Chancellor's just blamed market volatility on the international context yet again. Minister, your government's credibility is on the line here. Our viewers have got Bloomberg terminals. They can see that the pound movements, the gilt movements, are tracking your government's announcements. The pound's risen this morning after this U-turn. Do you admit now that not only is your party's reputation for fiscal discipline on the line, but it's also the reputation for home ownership, because mortgage rates are going up because of your policies?
Well, I mean, you've already just made the observation yourself that sterling has gone down, it's gone up. On the question about home ownership, this package includes significant stamp duty cuts for first-time buyers to encourage them onto the housing market. On the kind of cost of living questions more generally, I mean, clearly mortgage interest payments or mortgage payments are one important part of the sort of wider cost of living headwinds that people across the Western world are facing. And what we're doing to try and alleviate those is firstly make sure the tax burden on families is as low as it can be. That's why we're obviously sticking with the broad-based tax cuts. Secondly, the most significant threat on the cost of living side is obviously the energy crisis caused by Putin's illegal invasion of Ukraine.
Yes.
And we've had an enormous intervention there to protect households. Just a few weeks ago, families and businesses were worried about average household bills going up to £5,000, £6,000, even £7,000 a year.
But of course, that's not what markets are concerned about.
And through the energy price guarantee, we've made sure households are protected from that. It won't be more than £2,500 on average, but that will, of course, have an effect on inflation, because independent analysis suggests that energy price guarantee intervention means that inflation will now be 5% lower than it otherwise would have been.
But Minister, the pound tanked after this budget, not the energy bailout. Finally, for credibility reasons, this has to be the last U-turn from your government, doesn't it?
The Chancellor has been very clear this morning that he is the rest of the growth plan, which is, by the way, 95% of it by fiscal value. This announcement today is only less than 5% of the whole by fiscal value. The rest of it's going to be implemented in full. British businesses, big and small, have welcomed this. It'll help them grow. It'll help them see their employees get higher wages. It'll see new jobs being created. It'll see the tax revenues generated to fund public services. I'm very excited about delivering the rest of this growth plan, the 95% of it, and the Chancellor is committed to doing the same.
Chris Philp, Chief Secretary to the Treasury, thank you so much for joining us. Francine, it's going to be a very busy day here. It's all about the economy at Tory party conference today, but we've heard about the big plan for growth. Another question is whether the Office for Budget Responsibility will agree that these plans will actually boost the economy as much as the government thinks. Francine?
Yeah, it boils down to credibility. Thank you so much, Lizzie Burden there at the Tory party conference in Birmingham. We'll get, of course, the expert reaction on some of the things that we heard there from the Secretary to Treasury. Now, coming up, oil surge, crude prices jump as OPEC Plus weighs by cutting output by more than 1 million barrels per day at Wednesday's meeting. More on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, OPEC Plus is said to be weighing output cuts of more than 1 million barrels a day when it meets in person later this week for the first time in more than 2 years. That would be the biggest cut since the start of the pandemic. Now, for more on this, we're joined by our energy markets reporter, Anthony DePaola. Anthony, why now?
Good morning. Good morning, Francine. Why now? Because this is kind of a pivotal point for the market. We've seen prices come down. And we are seeing some of these OPEC countries becoming much more susceptible, much more attuned to this decrease in prices after they've been enjoying several months of really high prices. We're still averaging about $100 for the year, but we are considerably down below that in the 80s right now. And some of those countries are saying, look, we need the higher prices. We need that for the investment in our industry. We need that for our budgets. Why a in-person meeting right now? Well, the speculation is that it's a lot easier to talk about the tough decisions, meaning the cuts, when you're in person. The Saudis are kind of in the driving seat of this group, and they can kind of talk to those other members, twist some arms if they need to get people on board to make those cuts and to show people that there is kind of a collective need to support this market now. So that's why it looks like they're getting back together in Vienna right now, Francine.
Anthony, thank you so much for the update. Anthony DiPaola there with the very latest on OPEC Plus. Now we have a lot of breaking news. We have the UK story, we have the OPEC story, we have the Credit Suisse story, and this, of course, is because of the CDSs. This is a picture overall. The gauge of credit risk rising to a record. This is a share price 3.61. So we're back with Elliot Hentoff, head of macro policy research at State Street Global Advisors. Elliot, I have actually a million-and-one question about financial stability that derives from Credit Suisse. So I don't know whether this could be a turning point for something ugly happening in the markets, or whether you discount it, you don't spend too much time on it because it's basically a stock, specific event.
It is idiosyncratic. It's clearly related to the particulars of Credit Suisse, some of the legacy issues, some of the fines they've had to pay, some of the business models that no longer work in this era. I'm less worried about it because it's not clear how the domino would transmit. So even if we had an event, we know today central bankers will step in. The lender of last resort is there to backstop. So from a systemic risk point of view, I'm not that concerned, big picture.
Okay, what are you most concerned about? So when you look at OPEC, when you look at the fight for inflation and what central banks will react, will we be in a recession?
Well, the OPEC news is very disturbing. There's two things that disturb me about it. One is, what are they seeing in the data that suggests to them that demand slowdown is so drastic that it justifies a 1 million barrel cut? So that's my first worry. The other worry is we've seen this buildup of disinflationary momentum in the US underlying. There's a wave of disinflation coming, but a lot of it has drawn on the fact that energy prices have come down. If energy prices reverse, some of that effect will be delayed, and therefore the financial tightening will go on for longer than we're currently pricing, or even the market's pricing. So those two things worry me a lot.
So if there's a data point that you look at, and what is OPEC seeing that we're not? Is there a data point that you're looking at to give us an indication, like a canary in the coal mine type chart?
I suspect they're seeing something from Asian data, particularly around China, in terms of a lack of revival in oil demand growth there. I think the European data is pretty clear that that's going to come down pretty strongly. I'm just suspecting they must be seeing something even worse than what's on our dashboards to suspect. Or it's an opening gambit that they're kind of a political play, say, we'll put 1 million on the table and then we cut maybe like 200-300 initially.
Which one do you think it is?
I'm hoping it's the latter.
Okay, me too. Elliot, when you look at some of the inflation numbers that we're seeing in Europe, they seem to be actually much stickier than what we're seeing in the US. How complicated will that be for the ECB to reverse it?
Well, the ECB, I think they're running out of time. The issue is how much tightening can they get in before the recession settles in, and really where the growth numbers start to contract at a pace where they have no room to maneuver. So it has to be as front-loaded as possible. I would even say by December, after December, it's going to get tough for them. Quantitative tightening, I think, by now is off the table. I know it's still being spoken about, but I do not see any realistic pathway for the ECB to do that.
Are you expecting a global recession, and of what depth?
Yes, basically we are expecting a global recession. I think that term is thrown around a lot, but we expect basically a contraction in most of the areas, and a growth recession in emerging markets.
Elliot, thank you so much. Elliot Hentoff there, head of macro policy research at State Street Global Advisors, joining us to talk about the UK, to talk about oil, and of course to talk about also liquidity in the markets. Coming up later today, we speak to Lorenzo Bini Smaghi. He's chairman of Societe Generale, also a former ECB official. So it's an exclusive conversation you don't want to miss. It's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The UK government has dropped a controversial plan to cut taxes for the highest earners just 10 days after announcing it. Chancellor Kwasi Kwarteng said scrapping the 45% rate of income tax had become a distraction. This afternoon, he'll be speaking at the Conservative Party conference in Birmingham, defending his so-called mini-budget. it. Now, in Brazil, President Jair Bolsonaro is heading for a runoff election against leftist candidate Luiz Inácio Lula da Silva. Lula took 48% of the vote to Bolsonaro's 43%, falling short of the simple majority needed for a victory. The outcome still puts a 76-year-old former president within reach of returning to the helm of Latin America's largest economy. The runoff election will take place on the 30th of October. Now, Russia has suffered another operational defeat in eastern Ukraine, casting doubt on its plans for total annexation. Several thousand Russian troops withdrew from Lyman in Donetsk over the weekend after becoming surrounded by Kyiv's forces. The town was a key logistics hub for Moscow. It comes just days after the Kremlin announced it had annexed the region after holding referendums labelled a sham by the West. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, we speak to Lorenzo Bini, the chairman of Société Générale, as a French lender welcomes a new chief executive. This is Bloomberg. The lady is returning. Well, Liz Truss's government scraps a cut to the top rate of income tax a day after backing the plan. We're live in Birmingham at the Conservative Party conference. OPEC Plus will consider cutting output by more than 1 million barrels a day. Crude price surge saps sentiment. Plus, not reassured, Credit Suisse drops to fresh lows as the new chief executive fails to calm markets. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. Happy Monday. I feel like it's going to be a volatile week. We talk about the perfect storm of all of these confluence of events. I'm Francine Lacqua here in London. Now, French lender Société Générale has appointed investment bank chief Slawomir Krupa as chief executive to replace the outgoing boss, Frédéric Oudéa. Finding a successor to Oudéa, the longest-serving chief executive of any major European bank, proved to be a months-long endeavor. Well, we're now joined by Lorenzo Bini. He's the chairman of Société Générale to talk us through the decision and actually what we can expect from the bank next. So, Lorenzo Bini, as always, a great pleasure to host you here in our London studio. Give me a sense, first of all, of what the plan for the new chief executive will be.
Well, the new chief executive will start his job in May, so it's going to be a transition with the new CEO who is in charge until May, to prepare his team and to prepare his strategy, his Investor Day in the middle of next year. And the strategy is first to continue to do the things that we've been doing, the merger of the French retail, which is a very important endeavor, the acquisition of LeasePlan by ALD, the restructuring of the investment bank, the development of Boursorama, which is an online bank. So there are a lot of issues and a lot of work to be done, and then of course revalorize, revalue the share price, which is the key objective, of course.
So what convinced you personally that he was the right man for the job? I know you.
No, we had a long process because we looked outside, we looked to people outside the bank, but in the end, the final focus was on the two candidates, internal candidates, the very good internal candidates. It was a difficult job. We chose Slawomir, his experience in the bank. He joined the bank actually 25 years ago. He knows well the bank. He has done the restructuring of the investment bank. He knows well the U.S. Economy, the U.S. markets, the U.S. regulator, the European regulator. So it's a whole series of issues that led us to make this choice, so and we're very happy.
What do you think his biggest challenge will be going forward?
No, I mean, his challenge will be to make markets understand that the value of our share is much higher than the one that the markets are currently valuing. This is going to be his main job.
Why do they misunderstand it today?
Well, I think they want to see delivery. And for instance, his own work in restructuring the markets is delivering quarter after quarter. I think we need to do more probably, but and we need to convince the markets. And the same thing for the other areas, like the fact that the restructuring of and the merger of the retail banks in France will deliver higher revenues. will enable us to cut costs more efficiently. So this it's not a one shot. It's going to be a long job.
Lorenzo, we also spoke to, of course, a lot of investors, and the fact that you chose the guy coming from the investment bank. What does it mean for the restructuring at the investment bank? Could you see that business grow under him?
Well, this business has been de-risked substantially, and so able to generate more stable returns, cutting costs also, being more efficient through the cycle, and that we will have to see because we are entering interesting times, to be very frank. And so this is one of the key challenges. And also, of course, the investment bank is an important part of the bank, but within a broader base that is also more stable, I would say, than the investment bank revenue.
Do you think a European investment bank could ever rival some of the Wall Street banks?
I think it would be a pity if in Europe we don't have investment banks and we have to rely only on US banks. European clients want, in the end, stable counterparts that are there always, not only in good times, but also in bad times. And we've seen that, often when you have a crisis, there is a tendency to concentrate on your own market, and this is true for American banks also. So European banks, and Société Générale has proven to be there, even in difficult times. And so I think that's what clients want.
Give me a sense, actually, of what this means for the future of banks in general. You use that euphemism, we're going through interesting times. What does that mean for banks?
Well, I think interesting times means, the energy crisis, the geopolitical uncertainties, financial markets having to absorb the increase in interest rates. So I think actually the banking system is quite solid, much more solid than 2008. We don't know about the shadow banking system, how it will react. But I think banks today are better regulated, better managed, with higher capital. On average, I would say, overall, they are better equipped to address difficult times ahead, and better able to help the economy in these difficult times. So to help the clients, the successful clients, of course, to weather the storm.
I'm looking at the credit default swaps for Credit Suisse, and frankly, it's scary, right? Is this because of the concerns on the bank, or do you think it's something more symptomatic of European banks or banking sector?
No, to be frank, I think it's quite idiosyncratic. I mean, it's really, this has been something that has been going on for some time now. They haven't been able to address all issues. I hope this is going to be a bell that will be able to shake the bank. But overall, I would say that the rest of the banking system is solid. And I think during the pandemic crisis, actually banks have been part of the solution. Now, I think this has been recognized politically also. So it's important to help the banks do their jobs in this difficult time, not to be an obstacle or to create problems for banks in this specific moment.
So you're talking about regulation. Don't over-regulate the bank. I mean, it is actually amazing that we haven't seen any big margin calls on either energy producers or nothing ugly, given what we lived through in the last 2-3 years.
Yeah, I mean, the problem is that regulation is often pro-cyclical. I mean, in bad times, they become tougher, and this creates problem for the ability of banks to support the economy. I'm thinking about macroprudential regulation. It's a bit paradoxical that we still have macroprudential buffers as the economy is slowing down. Frankly, it's difficult to understand. I would ask regulators to look closely at all the levers to avoid that banks are not able to really support the economy in these difficult times.
You mentioned shadow banking, and this is actually something that we used to focus a lot on, and maybe because of the crisis, we're focusing a little bit less on. Where do you worry about shadow banking? Is it the US, China, or even,
Well, I think a little bit everywhere. China we know very little about. In the US, the shadow banking is all the unregulated sectors. And, the next crisis is going to be very different from the old crisis. And we have to look carefully at what is not appropriately regulated and not wait for the next crisis to regulate things. And in Europe, we need to move forward, not waiting again for the next crisis. It's a pity that we've been stuck with this banking union and capital market union. the political will to move forward has been insufficient, and everybody's looking at its own market, but that's not the solution for Europe to be competitive.
Lorenzo Bini, Smaghi, thank you so much. The chairman of Societe Generale, he stays with us because we have a lot to talk about. We talk about inflation. He's, of course, a former ECB official. So we talk about inflation, central banks, and we'll talk about Italy. Coming up, EU finance ministers are set to meet as the outlook for the European economy remains on edge. So we'll continue the conversation with Lorenzo Bini, Smaghi. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, EU finance ministers gather in Luxembourg today with the backdrop of high inflation, Europe's worsening energy crisis, as Gazprom, for example, halts supplies to Italy. Now, Lorenzo Bini, Smaghi, chairman of Societe Generale, is still with us. He was, of course, a former ECB official. So you've seen it from all sides, from the market side, from also the ECB side. I mean, how difficult is it at the moment for the ECB to have an inflation policy that doesn't hurt growth too much, whilst at the same time dealing with inflation?
Well, the ECB has first to catch up because rates are still much below in inflation, so monetary policy is still quite expansionary. So they need to raise rates quickly, but not too much because we are going to face a downturn. So in the next couple of months, they will have to. They will hope that the economy is not slowing down too sharply and be able to catch up, and then wait and see, because it could be risky to raise rates beyond a certain level.
How do they look at political risk? So I was in Italy, it was just 7 days ago, actually. A lot has happened since in global markets. So we were in Rome trying to figure out what the win of Giorgia Meloni means for markets and for the Italian economy.
Well, I think the experience in London, in the UK, has been quite useful, maybe for Giorgia Meloni to be, and she's careful. She wants to first look at and work with the old government to prepare the budget. So we have to wait and see also who will be the finance minister, how the organization of the cabinet will be, whether they will split the two ministries, Treasury and taxes, which I think would be a mistake. But let's see how this develops. On the other hand, she will have to deliver some of its promises. Her promises. She cannot just say, I forget everything. She has been cautious during the campaign, but still, on tax cuts. She has promised tax cuts, although gradual. The support of the economy, because households will be suffering this winter. Where will she find the money? Taxation of companies and so on and so forth. All these issues we'll have to see.
So do you think actually that what happened in the UK last week with that huge margin call on UK gilts, the Bank of England having to intervene because of the mini budget, brings in a new wave of responsibility with European politicians, or how would you describe it?
Well, markets are there. The fact that central banks have withdrawn from the markets has created a new system, different from the last 10 years. No. Markets are working again, are assessing risk. No. And so you have to be very careful if you're a policymaker not to make the kind of mistakes, if I can say, that you make an announcement and you reverse, then you lose credibility. I don't think she wants to do that, so she will be very careful. And, unfortunately for Britain, but for Italy, it was certainly a good example not to follow. So I think this will produce prudence in Italy.
And we've also heard this, depending on the finance minister, we think that Giorgia Meloni will choose a finance minister that is respected by the markets, that has international credibility. I think I saw also your name, actually, on the list of candidates.
Well, personally, I think in the end, like in England, it has to be somebody who has a political link to the prime minister. It's not just somebody that is credible in the markets. You need in the end to deliver. I think markets want somebody that is able to decide and not just have to go around and think about what measures to take based on long discussions. He or she will have to have a clear link with Giorgia Meloni. I think that's important. So he has to be political to some extent.
The ECB, I mean, the main question is that they now have tools to, of course, make sure that the spread doesn't widen too much. But what if there's a political risk? Like, are the markets going to, again, test the ECB's resolve?
I mean, so far things have gone relatively well, I would say. The spreads have widened, but not to a level that is extreme. Yeah. The conditions that ECB has set to activate its TPI are met by all countries because all countries are in line with the conditions. So the ECB could decide to shoot its own bazooka. It's, we will have to see, but the bazooka is there, and they will, the important thing is that the markets know that it can be used. Yeah. A little bit like the whatever it takes.
The concern on the markets are so multiple, and we mentioned all of them. Is the Fed the biggest unknown? And at some point, do we need to rethink, what the dollar does? Because because of dollar strength, it's really repricing all markets.
I mean, we are in a structural change, and maybe it's a good change because the fact that central banks were there all the time, taking away risk from the markets, was creating moral hazard. I mean, it's nice to expect central banks to be there, but then ultimately this creates distortions, so we have to be, of course, central banks have to be there in extreme cases to avoid the collapse of the system, but not all the time. I think markets have to step up, investors have to step up and take their own assessment, their own views of the risks. I think we are facing probably an uncertain period, but there will be a recovery at the end. And I think markets are just waiting to find the right timing, like 2 years ago when the vaccines were found, then the market started booming again. I think if there was a signal on the geopolitical side, on the war, unfortunately it's not obvious how this could happen, but there will be a recovery and markets will stabilize. I think the markets are in search of an element that could trigger an upward move.
But this is a brutal realization, right? When you realize that the central banks aren't all powerful, especially if you're a young trader and thought they were all powerful for the last 10 years, what does it mean for market dislocations?
Well, there could be some dislocation, but there's a lot of liquidity around, and the liquidity will be there. I think central banks will be much more careful to be there all the time, because what they have produced over the last 10 years is maybe more stability, but in the end, when the shock occurs, they are needed, and this is not the right way to manage financial markets and in the end the economy. So from that point of view, it's a good structural change, I think.
Lorenzo Bini, Smaghi, as always, thank you so much for coming on. He's, of course, the chairman of Société Générale. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse shares have hit a fresh record low after attempts to reassure markets on its financial stability only added to the sense of turmoil surrounding the troubled Swiss bank. In a memo to staff, the CEO said the bank has a strong capital base and liquidity position and promises regular updates ahead of a new strategic plan at the end of this month. A surge in IPOs in China has propelled Sci-Tech Securities to the top spot in the global league table for equity issues. Data compiled by Bloomberg shows Goldman Sachs dropped to second place in the year to date. It is set to be the first time since 2009 that the top position at the end of a quarter isn't held by a big Wall Street bank. And Tesla's worldwide deliveries missed estimates in the third quarter, with the company blaming challenges in securing vehicle transportation capacity. It delivered a record number of cars in the third quarter, but still fell short of the 358,000 the market was actually expecting. Now, the CEO, Elon Musk, says Tesla is aiming to smooth out deliveries away from and end of the quarter rush. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, Brazil's presidential election heads, to a runoff after incumbent Jair Bolsonaro puts in a stronger than expected showing. More on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Brazil's presidential election will go to a second round after neither leading candidate was able to secure a simple majority. The frontrunner, former President Lula da Silva, fell just short with 48% of the vote. Now, the incumbent, Jair Bolsonaro, did better than expected, winning 43%. Now, for more on all of this, we're joined by Bloomberg's Rodrigo Orihuela. Rodrigo, thank you for joining us. So what does this mean for the largest economy in Latin America?
So what does this mean? Going forward, the expectation is whether Lula will be able to go a bit more to the center, because he was the one who underperformed slightly in this election on Sunday, whereas Bolsonaro did much better than expected. So now the big question is, how will Lula capture those additional votes, and especially try to convince voters who supported the third and fourth placed candidates, who came up with a total combined of about 8%. The other big question we have is whether Lula will or not say who he has in mind to be his economy minister. There have been reports that he was thinking of a central banker who served when he was president many years ago. This is Enrique Reyes, who's somebody the markets would probably like a lot to see as his candidate, because it would show that he has certain ideas about fiscal discipline in mind.
What does this tell us, of course, about how Brazilian assets will move?
So Brazilian assets, there was an expectation that if there was a tight race, and this came from several of the investment banks and the analysts, that a tight race would be good for equities and assets in general, because it would mean that none of the two candidates would opt to go for the radical kind of stance ahead of the runoff. So this was in fact the case. For example, JP Morgan made that 5% between the two candidates or less would be positive. So far, we have seen very little movement in assets, because there aren't that many traded in Europe. But we had an ETF that trades in Tokyo, which was up as much as 5% at one stage this morning, and it closed at about 2.5%. And some ETFs that trade in London and Paris are also roughly about 2 to 3% up.
Great, fabulous. Thank you so much for the update. Of course, we'll continue watching the election over in Brazil very closely. Bloomberg's Rodrigo Orihuela. Now, in the meantime, this is what the markets are doing. Quite a lot going on. Stocks are falling. U.S. futures are wobbling somewhat. So let's get that board up to see exactly what sterling's doing and what treasuries are doing. Global stocks falling to a two-year low. U.S. indices, or certainly the futures, are struggling for direction as we speak. There's a concern that there's some of these hawkish policies, of course, being implemented by central banks around the world will backfire at some point. That would spark a recession, and that would lead to a correction to many markets around the world. Now, markets are also taking focus about some of the earnings correction. The pound actually rising as the UK withdrew a plan to abolish the top income tax rates. Now, in general, global markets are in jitters over the impact of monetary tightening on the economy after banks, including central banks, including the Federal Reserve, reiterated their resolve to contain runaway inflation. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kriti Gupta in New York, our Anna Edwards here in London. And this is Bloomberg.
I do certainly think we're living through a period of elevated risk.
Gradualism, I think, is back in fashion now. If you want to prevent major volatility, you better act gradually.
Obviously, this is not the first time we've seen these kind of movements, and they never seem to be fully priced in.
Yes, we are looking for a recession, sometime next year. The question is, exactly when.
The market was already worried about global growth. It was already worried about UK fundamentals, which of course is why the timing of this budget was so bad.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Liz Truss does a partial U-turn. The British Prime Minister tries to fend off a rebellion in her own party by dropping a plan to cut taxes for the highest earners. We're live at the Conservative Party conference in Birmingham. The price of oil rises on indications that OPEC and its allies may slash production by the most since before the pandemic. Energy ministers meet this week in Vienna. And shares of Credit Suisse hit a record low. Attempts to reassure markets about the Swiss bank's financial stability aren't working. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Chrissy Gupta in New York. Kailey Leinz is off today. And higher energy prices, just one of the things that are weighing on risk appetite today then, Chrissy.
Yeah, you have to add that to the wall of worry that you are seeing around the world, of course, in Asia. You do have several markets that are closed. China, Australia, South Korea as well, all closed for the day. China will be closed all week, though, golden holiday. That does not necessarily stop their currency market and the PBOC from intervening, though, so keep an eye on that. But check out what it did when you talk about the actual equity indexes. That risk-off momentum, Anna, it really did start in Asia overnight, as so did the currency weakness. And that's going to be a key story, that dollar strength that you see, once again, pushing the Japanese currency, dollar-yen, to record weakness, 145, but it wasn't just dollar-yen. You can see it across the board, across the region, in a lot of these countries, by the way, that are commodity exporting countries. Once again, that really impacts their bottom line and their exports. But take a look at what's happening in the bond space. You do see the JGBs, actually those yields on the 30-year down about 8 basis points. Something you want to keep an eye on, that kind of diversification or divergence, I should say, between what the currency is doing and what the JGB bond market is doing. And that's really where a lot of people are saying, this could be the moment. This could be the moment that things finally break. Of course, they have been saying that for months now, but of course, we'll have to keep an eye on things like that. Commodities, though, they are still higher. Take a look at this. WTI crude at $83 a barrel. Brent crude, 88. It's interesting that it hasn't crossed back up to 90, so you are seeing some of that momentum, Anna. Whether it actually continues throughout the day, whether it continues into the U.S. session, that's a completely different story, Matt.
Yeah, very interesting picture to kick off this week. We have futures that are really doing very little in terms of up or down movement. Right now we see S&P futures at 35.94, so just off about 0.2%. And of course, was a terrible, no good quarter. In the last quarter, we had a drop of more than 9% on the S&P for the month of September alone. 10-year treasuries, the yield coming down a little bit as investors buy that debt. This is actually the price here, 91.17. But if you look at the yield, we're at about 3.78. I believe, on 10-year treasuries right now. So not near the 4% mark, or not terribly near it, but still very elevated compared to recent history. The same is true of the Bloomberg Dollar Index. Right now at 1336, we're not up at those 1350, 1360 elevated levels, but we're still well above where we've been for most of history of the Bloomberg Dollar Index. Obviously, dollar strength, a huge part of this market. And then WTI crude. Critty talking a little bit about the crude trade. We'll be watching it very closely. Right now, we're looking at $83.09 a barrel for Texas Intermediate. But if we get a cut to production by more than 1 million barrels, analysts are saying you could see that price rise back to triple digits relatively quickly. And we're also keeping a very close eye on gold, because we had some interesting reports, Anna, out of some London bullion traders who said they're running out of the physical commodity as so many Brits seek safety in the, perceived haven of gold.
Well, there's the thing. Let's have a look at, I wonder why. Let's have a look at what's going on European equities then. And we're seeing risk aversion to the fore, really, for European stocks, Matt. And interesting, you had the oil price there. And the rise that we're seeing in the oil price is generating one of the areas of positivity we have on European stocks. And that's not the norm today. Most sectors are in negative territory, but energy stocks are moving higher as a result of the higher oil price. To the downside, though, financial services really weighing on the stock 600. Credit Suisse very much amongst them. We'll have an update on the Credit Suisse story shortly. We've got the German 10-year yield in here for you, and we've got the euro. Really, the focus today is, of course, on the UK assets around the pound. We saw the pound surge a little through the early part of the European trading day, late part of Asia, when we started to get reports that perhaps we see a partial U-turn from the UK government around its fiscal plans for the top rate of tax. That was then confirmed, and the pound dropped a little bit. So those gains came, but then were short-lived, it would seem. We're also seeing, though, that some of the moves in the fixed income markets, so in gilt markets, are being held onto a little longer. So the market's now asking, are we going to see any further U-turns from the UK government? And will the Bank of England not necessarily need to do quite so much hiking as a result? That's being priced into certainly the short end of the curve. The Dutch natural gas futures often act as a benchmark, of course, so higher oil prices. We do see a little bit of weakness, though, coming through on natural gas, which is a relief, probably, for anybody watching the commodity space and the role that that has through the inflation story. More now on the UK government as it drops a plan to cut taxes for the highest earners just 10 days
after announcing it. Bloomberg's Lizzie Burden joins us now from the Conservative Party conference in Birmingham. Lizzie, what can you tell us then about the U-turn?
Well, Anna, the pressure got to Liz Truss here in Birmingham, and it's a hugely embarrassing announcement to have to make that they're going to undo scrapping the top rate of income tax. Of course, it had been hugely politically controversial, but this move had started to look inevitable. Yesterday, the Prime Minister threw her Chancellor Kwasi Kwarteng under a bus and blamed him for this policy measure. Then the former Cabinet Minister Michael Gove was interviewed. He said that the policy was not in line with Tory values. That seems to have been the straw that broke the camel's back, because all the people, all the MPs that were going to rebel against this policy seemed to be led by him. And then today we've had a round of broadcast interviews with the Chancellor. He said that we understand, we get it. It implies that maybe they didn't get it, they didn't understand before. He says that what changed was they listened to people. He said the 45p rate cut was becoming a distraction from all their other policies. Of course, the energy bailout was hugely expensive, so they're going to want to take political credit for that. He says that he's not considered resigning, but he's refused to rule out further U-turns. So we're going to have to wait and see whether there'll be any more rowing back to come. He's going to speak at 4 p.m, so investors, Anna, are going to be listening to every syllable from the Chancellor.
Yeah, absolutely. I mean, this is just one piece of the very controversial plan, which the market graded overall like an F-, right? We saw basically a crash in UK assets, including the pound sterling, after this mini budget came out. What can we expect from the Prime Minister from here?
Of course, because they may feel like they've removed the political toxicity, but the economic questions remain. That boost in the pound was only temporary. And what really offended markets in the first place was that this massive package of tax cuts is funded by borrowing. That remains. There was no forecast from the Office for Budget Responsibility. We're still going to have to wait for November the 23rd for that. And so are there going to be other U-turns? And bigger than that, will Liz Truss be able to survive? We're hearing that already some Conservative MPs have been trying to get the rules changed because, of course, she has a year protection from another vote of confidence like Boris Johnson faced. But the Tories want to stay in power, so many of them are now trying to get the head of the backbench committee of Tories to change the rules so that they can have a new leader and try to survive an election in 2024. So really the risk of Truss leaving office has been heightened this morning.
Bloomberg's Lizzie Burden covering all things of really the chaos in the United Kingdom right now. We thank you as always. Let's go over to the commodity space. The price of oil jumping on indications that OPEC Plus may slash production by more than 1 million barrels a day to revive those plunging prices. A cutback of that size would be the biggest since the pandemic. OPEC Plus meets Wednesday in Vienna. Anthony DiPaolo, energy markets reporter, joins us now from Dubai. Thank you as always for joining us. Walk us through the logic of another output cut.
Hi, good morning. Yeah, the issue is really price. The price has come down a lot over this last several months. We've had monthly declines, several consecutive weekly declines, and that's really hurting some of the bottom lines of some of these producers, some of their income. We've still got prices roughly around the $100 average for this year after the Russian invasion of Ukraine caused prices to spike earlier this year. But we've seen this coming down. There's a lot of concern in the market about recession, about inflation, about how that's hurting the consuming countries. And so that's why OPEC is kind of trying to refocus minds on their ability really to impact the market. We've been talking about a cut of 1 million barrels a day or more. Again, we have to look at that and look at how some of those OPEC countries haven't really been making their quotas yet. So the market is undersupplied according to what OPEC should be giving the market. So we'll have to kind of discount that cut when it does come to see who are the countries that are actually cutting there.
Anthony, how has this price, I mean, look, I'm looking at a Brent price of $88 a barrel. How has this $88 a barrel come to be seen by OPEC Plus as a low price for oil? Because certainly for consuming nations, it won't feel that way.
Yeah, exactly. Consuming nations will be seeing some relief. they'll be enjoying this price because we've got some big producers like India, for example. They are very price sensitive. They have been switching also their purchases to get the cheaper barrels there. Some things that are figuring into OPEC are potentially the December 5th European ban on seaborne Russian crude imports. The idea is that will shift some crude into Asia. There is talk also of a price cap that the U.S. has been pushing and trying to get the Europeans come on board too. So if that were to bring effectively the cost of Russian oil down, if that were accepted, and that seems like a long shot, if that were accepted, that potentially brings the overall price down. So there's all these concerns about how the price is going to go forward. As I said, OPEC trying to kind of put a line under where the price is now and buttress the oil market because they get used to those prices that are 100 and above, and that helps the budgets. That helps some of these countries coming back from the years of the pandemic when production was really low there. So they want to defend that price about where it is now, Anna.
Right. It's a drop from $140 a barrel, but it's only recent history when oil went negative, remember. Lisa Abramowitz got paid to take one barrel. Anthony DePaola, thanks so much for joining us, reporting on the oil picture from Dubai. We'll be paying very close attention to that. But really, it's the banking news that took my breath away in terms of corporate stories. Credit Suisse shares hit a fresh record low. That's after attempts to reassure markets on its financial stability only added to the sense of turmoil surrounding the troubled Swiss bank. Marion Haltermeyer, our finance reporter out of Zurich, joins us now for more. So basically, Marion, the concern here is that insuring against a default is getting more and more expensive, really back to crisis levels for Credit Suisse.
Yes, exactly, Matt. It's not a great sign for the market right now, but I think what we need to think about when we're looking at, the record low on the share price and also the highs on the credit default swap spreads is we need to think about, where is the bank headed? What will the strategy update look like at the end of the month? And are we really looking at a bank that is, as many of the rumors say, going bankrupt, or just one that's just in dire needs of proper leadership and proper overhaul? I think we're leaning towards the latter at the moment because the bank has said they have enough capital buffer, they are stable, they have liquidity. We're not looking at a financial crisis era situation.
Right, so yes, those capital buffers, those CET1 ratios, perhaps, Marion, comforting to some. The stock is down by 8.6%, though. Any sense that they might speed up telling the markets where the business goes from here, if that is the big sort of strategic question that hangs over the company?
Right, exactly. I mean, we are only weeks away from the big announcement, but I think every day is critical at this moment. So we'll have to see whether that does prompt them to be a little bit more forward-thinking and pre-announcing a few of the things that they may have already decided on. But at the moment, they keep reiterating, end of October is when we will inform the market on everything we plan to do.
All right, Marion, thanks very much. Marion Haltermeyer covering the Credit Suisse story for us out of Zurich. We'll be paying really close attention to that. And really banking in general today, among the top stories that Bloomberg clients are reading, a surge in China's IPOs propelled CITIC Securities to the top spot in global league tables for equity issues. CITIC edged out Goldman Sachs, and it's the first time since 2009 that the number one position at the end of a quarter wasn't Goldman Sachs or another U.S. Wall Street firm, Critty. So it looks like CITIC is taking over the league tables for now.
Yeah, well, speaking of some of the top stories, we have to take our I want to say, weekly, daily check on Tesla. One stock, of course, that we're keeping an eye on in pre-market trading. Shares falling after the electric car maker missed estimates with global deliveries in the third quarter. Tesla delivered almost 344,000 vehicles. It was roughly 14,000 fewer than estimates. Tesla warning that it's facing challenges in getting cars to customers, suggesting that those supply chain problems, well, they are still an issue. Those shares just down about, I want to say just shy, about 5%, Anna.
Yeah, absolutely. It did seem to be quite Tesla-specific, didn't it, the drivers for that? But we'll certainly keep an eye on that stock and, indeed, the sector, autos and auto parts, a sector under pressure here in Europe as well today. Coming up, Pooja Kumra joins us, TD Senior European Rates Strategist. Get a great day to speak to her when it comes to the gilt markets. We've seen a partial U-turn from the UK government on some of its fiscal plans. Does that materially change the outlook for gilts? Charlie Morris also joins us, Crypto Composites CIO of ByteTree Asset Management. We'll talk crypto a little bit later on. on. Plus, Brazil heads to a runoff. How yesterday's vote changed the landscape of the election. More ahead. This is Bloomberg.
I do certainly think we're living through a period of elevated risk. In the same way that people became anxious in August of 2007, August of 2007, I think this is a moment when there should be increased anxiety.
Former Treasury Secretary Larry Summers speaking to Bloomberg's David Weston on Friday, comparing where we are right now to the beginning of the great financial crisis. I thought that was very interesting, and Valerie Teitel, our charts producer out of London, put together this picture for us with the Bank of America Global Risk Indicator showing that we're getting back to crisis levels, not quite where we were in 2007. So it's very interesting to see that Summers, the former Treasury Secretary, would say we should be there when we're only here. Joining us now is Pooja Kumra, Senior European Rates Strategist at TD. Pooja, do you agree that, global central banks hiking to try and quash inflation at the same time when the UK government puts forward a fairly disastrous economic plan means we should be looking at the world in the same terms that we were at the beginning of the GFC?
Good morning. Yes, markets saw the kind of move that markets saw last week is something that's not imaginable. And I think that's where I think it does put pressure as to how we proceed going forward. 100 basis points sell-off in a day, 100 basis points rally in a day is something markets cannot do. And especially this entire LDI story that we saw in UK basically tells you that now we will be looking more at capital liquidity stories. And I think that's where is more of a strain for the market that we could, if something breaks here towards year end, where anyways the liquidity is very low, it could be very hard for markets to take in. And I think that's where the comments came in from, that Treasuries will not be immune to the move, whether it's only in UK. We did touch almost 4% in Treasuries, and markets are scared about stories emerging from different banks as well as asset managers as to how they are dealing with this big repricing.
Yes.
Note that we have not seen such big rate increase ever in the history of crisis.
Yeah, so Pooja, so good morning. And so the epicenter of the current crisis does seem to be where we're standing right now here in London. Had a lot of people, learning a lot about LDI pension protection strategies and wondering if this was going to be something like CDO squared from the GFC, something you needed to swat up on very quickly. Let me ask you about what we've heard this morning then from the UK government and if it changes your view on gilts, because the UK government backtracking on some of the policy, only £2 billion worth of the unfunded tax cuts that they launched last week, but something of a U-turn. Does this change your view on gilts at all?
So we will have a very rough ride for gilts, just given the fact that, as we all know, that the official forecasts with respect to the OBR only come on November 23rd. But it basically tells you that government has taken the message. They got the message not only from markets, but also from YouGov polls, where they are trailing behind the Labour as well. So I think there will be a very careful recalibration of the speech, and they will try to backtrack some of it, and that should support gilts in the small term. But I don't think it's a big changer, given that markets are still pricing around 120 basis points in rate hikes by the BOE. And also BOE's buying instrument, this new policy, whatever we call it, also ends in mid-October. So I think it's a brief breather. And I think in terms of my outlook, I would still like to play some steepeners and gilts, 2 cents, just because I think the QE policy is short-lived and markets are kind of pricing way too many hikes for now.
So if that QE, for want of a better word, although it isn't quite like QE, policy is only going to last until October the 13th, then, Pooja, we have breathing space as you describe it. What should that breathing space be used for so that we don't end up just back where we started pre that QE programme on gilts when the Bank of England stopped supporting that long end of the gilt market?
I think for once, the government as well as the Chancellor need to talk more about the spending cuts. So far, we know there's room of 40 billion spending cuts, which is not big, but I think they need to detour from what they have told us last week. That is not the policy that they can continue in this inflationary environment. We also need more messaging from BOE. Like, we know that they won't go for inter-meeting hike, but they have not been very clear as to their policy, as to what will come going forward. So I think more communication from BOE as well as the government will help to soothe the market in the short term.
Pooja, what do you make of the currency story in the UK right now? I think this is something you're seeing around the world outside of the United States, but essentially this divergence between hawkish central banks and continued currency weakness. To what extent is that going to be the Achilles heel for sterling?
I think we are, given sterling is an importer of goods as well, we are importing this kind of currency weakness from the energy crisis, and the government's policy did not really help so far. So I think there are lots of people who are actually calling for sterling to actually drop below parity. And to be honest, at this stage, that could be possible given the fact that USD still remains a reserve currency for the world. So I think it will be tricky right now, but it all comes to the government if they can handle the situation. Because when it comes to rate hikes, I doubt BOEs going for 100 or 125 can actually stabilize currency right now. It will be another pain trade for the economy.
Well, isn't it exactly? I mean, as they continue to raise rates, as central banks race to outraise each other, what does it mean for, in the UK, particularly home buyers who need to remortgage, but just generally companies that need to refinance?
Yes, I think that is a tricky one, and that's why we saw banks just not giving any mortgages right now, because mortgage rates are at the level that have not been imagined, and it's not just a UK story. 30-year mortgage rate in US is around 7%, closer to junk bonds. So I think that's where is how are we going to escape through the year end, and I think that's where markets are. The beautiful chart that you showed us is that we are heading towards tighter financial conditions across everywhere, because no one is used to these kind of refinancing rates.
Right, so maybe a fire sale coming in UK housing. Pooja Kumra of TD, thanks so much for joining us. I want to get right now to the news from around the world that you need to know. Here's the first word. The death toll from Hurricane Ian keeps rising. According to the Associated Press, at least 68 people have been confirmed dead in Florida, but 7 of those, all but 7, I should say, were in Florida. President Biden will visit the state on Wednesday. Ian was one of the strongest storms to make landfall in the U.S. In Brazil, the presidential election is headed for a runoff. On October 30th, voters will choose between President Jair Bolsonaro and his leftist rival, former President Luiz Inácio Lula da Silva. Lula had the biggest share of votes on Sunday, but fell short of the absolute majority he needed to win. And another defeat for Russian forces in Ukraine. Several thousand Russian troops withdrew from the strategic town of Lyman over the weekend. They were outnumbered and ousted, I should say, increasingly encircled by Ukraine forces. Lyman is in the Donbass region, one of 4 annexed by President Vladimir Putin after sham votes. Coming up, Charlie Morris, the CIO of Bytetree Asset Management, joins us to talk about what all of this market turmoil means for Bitcoin, especially if UK UK investors are running to gold. Why not Bitcoin, as it finds it more and more difficult to crack $20,000? This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Liz Truss does a partial U-turn. The British Prime Minister tries to fend off a rebellion in her own party by dropping a plan to cut taxes for the highest earners. We're live at the Conservative Party conference in Birmingham. The price of oil rises on indications that OPEC and its allies may slash production by the most since before the pandemic. Energy ministers meet this week in Vienna. And shares of Credit Suisse hit a record low. Attempts to reassure markets about the Swiss bank's financial stability are just not working. I'm Anna Edwards in London with Matt Miller and Kriti Gupta in New York. Kailey Leinz is off today. And Matt, risk aversion really hanging over the markets today. Everywhere apart from energy stocks, it seems, looking a little weaker here in Europe.
Yeah, well, here in the U.S., we don't see much movement at all in terms of futures after September drop in the cash trade of more than 9%. We see futures very little change. Actually, we were down about 0.2% a half hour ago. Now we're up about 0.1%, but safe to say not a lot of movement there in S&P futures. We do see the 10-year yield coming down a little bit. You'll notice that even though we have a down arrow here, the numbers are green. That's because the price is going higher. It would make more sense if we had the pricing green, but nonetheless, the yield coming down 378, so backing away from the 4% level that we reached last week. Actually went through it momentarily. NYMEX crude is up about $3 a barrel on the news that OPEC may consider production cuts of more than 1 million barrels a day. So 82.61 is the level you're seeing text intermediate trade. Obviously, Brent is trading a bit higher this morning. And then gold is coming down. Right now, 1660. I thought it was interesting that there's a real rush to gold in the UK. So in pound prices, it's much higher. In dollar prices, not so much, but it makes sense when you look at the dollar-pound relationship as well. The pound has just come crashing down after Kwasi Kwarteng's mini budget 10 days ago. He did a little bit of a turnaround there this morning, just a little bit, but not enough to really change the picture in terms of sterling strength. Kriti, what are you looking at in terms of pre-market movers today?
Well, unlike you, I don't have a rant about our pre-market movers. I know you had got one on your Treasury story. I'm glad you actually finally got that in. For our radio audience, I actually had to listen to that in the commercial break, if you can imagine. For pre-market movers, one of the big game changers is potentially going to be Tesla shares. They are down 5%, just shy of 5% in pre-market trading. This comes after the electric car maker missed estimates with global deliveries in the third quarter, delivering almost 344,000 vehicles. That was roughly 14,000 fewer than estimates. Tesla, of course, warned that it's facing challenges in getting those cars to the customers, suggesting that those supply chain problems, well, they're still there. They're still an issue, Anna. The question is, for how long?
Yeah, absolutely. Tesla, a real focus then for the autos space. Interesting to see what it was that was driving those delays in deliveries then, Kriti. This is what I have here on European equity markets. So this is the weakness I was talking about, down by 0.9%. Most sectors in Europe have been negative for much of this morning. Energy stocks, though, are moving higher, up by 1.8% because of the move higher that Matt described on the oil price. What will OPEC Plus do on Wednesday? And will that gain in oil prices be sustained? That clearly positive for energy stocks. Credit Suisse is the big weight on the financial services sector, and that is really weighing on European stocks today. So we're down by 7.6% on Credit Suisse. We've touched, Matt, an all-time low on the share price, an all-time high on the CDS. So it costs more to insure, more than it ever has, to insure against default on the Credit Suisse debt. So that's interesting. When it comes to the Credit Suisse story, we're still waiting for a couple of weeks, despite reassurances from management about where the business goes, waiting for the details around the future strategy. And this is the 2-year yield. So just as Matt was saying that we've got buying of 10-year treasuries, we've also got buying at the short end, at least, of the gilt curve, and that is bringing down those yields just a little bit as the market reassesses just how much hiking we're going to need to see.
Even over there.
How much hiking are we going to need to see from the Bank of England is what is being factored in this morning as we see that partial mini U-turn from the UK government.
All right, yeah, we're looking, I think markets are betting on a 120 basis point increase before the November meeting, which has come down from 200, but is still relatively aggressive. Let's talk about crypto. It's held up better than just about anything else in the third quarter, yet the hunt for a bottom continues as long-term holders cling on with expectations that there's more pain to come and retail investors stay on the sidelines. Charlie Morris, founder and CIO of ByteTree Asset Management, joins us now. Charlie, first off, it is pretty interesting that as everything falls apart, Bitcoin holds to about $20,000. What do you make of that?
I think it's pretty exciting. I mean, it was the narrative a year ago that Bitcoin would be the safe haven. Obviously, it hasn't been. It never has been. It's always been a risk-on asset. But I think it's de-risked before everything else has, and that's really quite good news. So the low was in June, as you say. We're higher than the low. Mainstream stock markets are lower than the low in June, and that's showing some relative strength. Fund flows into Bitcoin, ETFs and so forth, have been slightly positive, in contrast to things like gold and equities, which have been very negative. So I think that the hot money has left the building. As always in a crypto winter, they're building for the next cycle. and that next cycle's getting closer.
So when do you expect the next cycle? How high are we going to see it? I mean, I remember when Bitcoin was trading for $75, so 20,000 is relatively strong. But of course, many people got into this market when it was trading for 40,000, 50,000, 60,000. When do we get back to those levels?
Well, that's what happens in all markets. I'm sad to say, not many people buy at the low. Most people buy at the high and sell at the low. But that's just markets for you. So I don't think you can blame crypto specifically for that trait in mankind's trading failures. But, you've got the next halving cycle in April 2024. And historically, we'll go into the fifth epoch. So that's a fifth 4-year cycle for Bitcoin. The inflation rate goes down to 1%. Which is very low indeed. So the new supply of coin will be 1% per year. And that is 18 months ago. And previously, we've seen that the low for the cycle kick in around 18 months ahead of the cycle. The big low years were 2014, 2018, 2022. There's a ring to this. The high years were, tended to be the year after the halving cycle, which was, 2012, 2016, and 2020. So 2024 is getting closer. And normally we're going to see a good bull market start at least a year ahead of that.
Well, Charlie, speaking of timing, 2023 is also getting closer. It's a year that the digital euro, the digital yuan are supposed to be making their debut. What does that do to the prospect of crypto broadly?
I think it reinforces the narrative that it was always a good idea in the first place. I don't think it's competition. I think it's just showing you the way forward. Financial markets, are quite archaic in many ways. I know there are advanced parts to it, but there are many parts of financial markets which really could be improved. And the whole concept of secure T+0 digital settlement is very appealing. And there's a lot of people who think that the tokenization of everything is where the world goes. So our stock markets, our bond markets, and our FX markets you just mentioned will all become digital at some point in the future. And so really the government's just leading the way here and saying, actually, it was a good idea all along. Bitcoin itself is a digital asset, so it comes with a whole load of volatility. It's a slightly different story. And then ETH and the proof of stake world is more of a fintech story. And so there are different things happening, and there are nuances, which I think that people who have kind of dismissed Bitcoin 3, 4, 5 years ago should really come back and have another look.
Okay, I mean, and Charlie, how much do you think that institutional investors will come back and have another look? I mean, we notably, vocally hear often from the JP Morgan CEO, who's not a fan, but elsewhere, do you see more appetite from institutionals, or are they very much more focused on the other opportunities you describe around fintech and around the blockchain rather than Bitcoin, for example?
Yeah, it was a very popular idea in 2017 to say, I love the blockchain, but I don't like crypto. But, they're joined at the hip. It's a bit like saying, I love the internet in 1999, but I don't like internet stocks. I mean, the innovation comes from these projects. It doesn't come from thin air. I don't think the institutions have been involved on the buy side. I don't think people are investing in crypto for their institutional clients or their retail clients or in the mutual fund universe. It's not happening. But the supply side, the sell side of the financial service industry is launching product. I mean, BlackRock did a blockchain equity ETF last week. So there's an about turn from a few years ago. And lots of firms are now involved because they see that things are going to change and the money will flow at some point. But there's got to be a change in perceptions. And I think that the financial service industry is massively behind the curve on this one. If Bitcoin was dead, it would already be dead. You wouldn't get through a year like we've just had with the biggest rate hikes in history or in living history. And for it still to be 20K, and the underlying network of Bitcoin, for example, if you go back to 2018 when Bitcoin was on the floor, the underlying network saw $4 or $5 billion change hands each week. Here we are at a cycle low, and it's $25 billion a week going across that blockchain. It's incredibly resilient, and it grows year on year.
Charlie, thanks so much for joining us. Hope we get to speak to you again soon. Charlie Morris there of Byte Tree Asset Management talking to us about crypto in the midst of a UK winter. Tune in to Bloomberg Crypto every Tuesday at 1 p.m. New York time. Our weekly show covers the people, transactions, and technology shaping the world of decentralized finance. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking at a live shot of the principal room. Coming up later today, an interview with Spain's Deputy Prime Minister, Nadia Calvino. That's at 7 a.m. New York, 12 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kriti Gupta in New York. Kailey Leinz is off today. Let's get back to the UK Conservative Party conference in Birmingham. Prime Minister Liz Truss has dropped a plan to cut taxes for the highest earners just 10 days after that plan was first announced. Joining us now from the conference is John Micklethwait, Bloomberg's editor-in-chief. John, great to have you with us on the programme. The dust still settling on the mini budget. The dust now has to resettle around this sort of partial U-turn. What do we think is the sort of medium-term implication of what we're seeing develop in Birmingham where you are?
Well, I think politically it's a gamble, and the gamble is that if you make the retreat now, it doesn't catch you up. And the problem there is you've already got rebels who scent blood, who are looking for other things to rebel about. There's issues about benefit cuts and things like that they might say more about. There's a whole issue about borrowing so much money to fund the wider tax cuts. But I think probably, at the moment, it looks like something they probably should have done because the level of animosity here about it was rising. I think the real problem for Britain at the moment is less this issue about tax cuts, it's the borrowing costs. And particularly, if you have a pro-growth agenda, which is what Kwasi says he has, then the single biggest problem with that really is if interest rates keep on going up, then that will dampen whatever they do on the supply side.
Yes, John, is there any sense that that is well understood by the delegates there? Because they're challenged often, well, during the last 10 days, they've been challenged repeatedly on what went wrong, really, with the delivery of the mini-budget. And they keep talking about the need to support families with their energy bills, and they blame the international phenomena of higher interest rates, rather than reflecting on perhaps the measures being, like them or not, at the wrong time, given the inflationary backdrop.
Yeah, there's a lot of sort of limp Thatcherism here, where there's a lot of sort of earnest young people who think that the markets are on their side because they're quote-unquote conservative. But if you do things that annoy the markets, they're no longer quite so friendly to them, and they've just discovered that. They thought the markets were on their side and against Labour. Well, they're not if you do large unfunded tax cuts, and also if you do it without the OBR behind you, although some of them point out that the OBR, the Office of Budget Responsibility, its record on numbers is not great, but it's the equivalent of handing in your homework without having marked it yourself. And that is not entirely, that doesn't work with markets.
Yeah, it strikes me that Trussonomics would really love to be recognized as Reaganomics, but the UK has a very different economic dashboard right now than Ronald Reagan had when his government enacted those policies. We had at that time a current account surplus. We had a currency that everybody in the world wanted. We had already tackled the inflation problem. Does Kwasi Kwarteng not understand this? Does Liz Truss not get it?
I think you're right. Is the parallel really is in some ways Reagan, and the really big difference is the dollar. You know, America had the dollar. That gives you a hell of a lot of protection. Britain doesn't have that. I think the woman who still haunts the Conservative conference, she's done so pretty much every one since 1979 in different guises, is Thatcher. She's someone who Liz Truss wants to emulate. Kwasi Kwarteng has written a book in which he very much, and his sort of central belief, I think, is that, Thatcher came in, she stood up to the wets, especially these sort of posh-sounding wets, and she got her policies through. But you look back, actually, Thatcher did it in stages. She concentrated on fiscal discipline to begin with, and she only began the sort of main, sort of really big giveaways later. And that's in a sense where there's so much glorification of Margaret Thatcher, often for very good reasons, but not always, that on that particular part of the Tory party, that it makes it sometimes difficult for them to look back at history and understand what actually happened, as opposed to what they would like to think happened. I think it's also worth noting that Thatcher is helped a bit by the Falklands War coming, which did change things. But you do detect from the Tory leadership here a sense that they think, events could change, and some things could come their way which help them.
It wasn't quite as long ago that George Osborne put into place a policy of austerity. Now it's interesting, Simon Clarke, the Secretary of State for leveling up, ironically enough, says Britain should prepare for a new age of austerity. Can you remind our international viewers how that austerity set Britain up for where we are now?
Well, the austerity, in a strange way, obviously, like everything involving economics and politics, there's a massive debate about it. But effectively, Osborne did this thing of talking quite tough. It perhaps was not quite as severe in the terms of what he did, but the message he sent to the markets after the financial crash was that Britain would get its house in order. And the markets on the whole, there were one or two judders, but on the whole, they bought that idea. You then have the splurge of COVID, and now you've got the second splurge coming up now to deal with, as they would see it, to do with the Ukraine war. And there has become a habit on the right in Britain, perhaps more here than other places, that it's fine just to go and spend money, and in the end it'll be all right. In a strange way, that's almost against the old Thatcherite idea, which Osborne was also typifying. The idea of sound money has always been at the kind of core of what the Conservatives stand for in this country. Their whole ticket is that they are the people who understand business, they're the pragmatists, and the airy-fairy ideas come from the Labour Party. And what's happening at the moment a bit is you've got people like Keir Starmer who are looking rather boring and reliable, and the Conservatives are seeing all over the place. And particularly this idea of if the Conservatives do lose that sense of being the party of sound money, the people who are able to look after your cash, that is a very big thing to risk, and that is what they've run into over the past week. And that's on top of all the obvious economic problems of what they did. But politically, that has always, money and defence have always been the things that the Tories can go back to, in the same way as Labour tends to go back to issues like health and education.
John, thanks so much. Thanks for your time. John Micklethwait, our editor-in-chief, joining us live from the party conference, the Conservative Party conference, which continues in Birmingham today. Later on today, we'll hear more from Kwasi Kwarteng, the Chancellor, and then on Wednesday, we hear from the Prime Minister herself. Now, coming up on this programme, we'll turn to Brazilian politics. Brazil's presidential election heads to a runoff after incumbent Jair Bolsonaro puts in a stronger-than-expected showing in the first round. More on that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Matt Miller in New York and Anna Edwards in London. Kailey Leinz is off today. Let's take a look at what's going on ahead this week. China's market is closed for the Golden Week holiday. Meanwhile, in the UK Conservative Party's conference takes place until Wednesday. OPEC Plus meets in Vienna also on Wednesday. We're going to perhaps see an OPEC decision, a potential production cut. We'll also hear from the Fed all week long with Atlanta Fed President Raphael Bostic and New York Fed President John Williams both speaking today. And of course, it's U.S. Jobs Day on Friday. Certainly, I think all eyes waiting for that number, Anna.
Yeah, certainly. We will focus on that later on in the week. Now, Brazil's presidential election is headed for a runoff. On October 30th, voters will choose between President Jair Bolsonaro and his leftist rival, former President Luiz Inácio Lula da Silva. Lula had the biggest share of votes on Sunday, but fell short of the absolute majority he needed to win. For more, let's speak now to Bloomberg's Rodrigo Orejuela, who joins us with an update. Rodrigo, what does this mean then for Brazil? What can we expect to see for the next month? How does this play out?
So the key here is that Bolsonaro did better than was expected. Lula did roughly within the margin of error, but towards the lower end. And so now the big expectation is, will Lula try to get more and more votes from the center, which means his rhetoric will also go down. There are two candidates who came in third and fourth, and he may try to get the votes from those two. Bolsonaro doesn't seem to have that need, but obviously he has to do well to get over Lula. The surprising thing for Bolsonaro as well was that his candidates for the Senate and the lower house did really, really well, and that is giving him a boost. The other big question is, will Lula come out and say who he expects to name or who he plans to name as economy minister? The expectation is that it will be Enrique Reyes, who served as central bank governor under him when he was president 10 years ago or more, and that would probably be a good sign for the markets. That's somebody the markets would likely welcome.
Because the idea is, and explain to us how they would differ, Rodrigo. These two leaders would have massively different effects on Brazil's economic policy.
They would have a lot, on some aspects they would, but both are trying to show certain fiscal, both need to show that they will be disciplined on the fiscal front. No, there aren't any expectations that either one of them will be extremely fiscally disciplined. However, there are big differences, and one of the keys is privatization. Bolsonaro has said he wants to do more. The key there, the crown jewel, is Petrobras, the oil company. Lula, on the other hand, does not want to privatize Petrobras, and he wants to use it to do more investments in refineries and so on, and also control fuel prices. So there are some key differences there, without a doubt, yes. And then how they will work with the central bank. Lula has said that he doesn't think the central bank should only intervene through interest rates. There are other things he believes the central bank should be doing.
Rodrigo, thank you so much. Bloomberg's Rodrigo Orejuela with an update on what we've learned about Brazil and what is still to play out in the Brazilian presidential election. Thanks to Rodrigo for joining us. European equity markets then on the back foot today, down by 0.9%. Higher oil prices delivering stronger share prices for energy players. So that particular sector moves higher today, up by 1.9%. So watch how that translates into the US session when it starts in a few hours' time. But elsewhere, we see a lot of pressure on the share price of Credit Suisse. That particular stock down by 7.5% as the management fails to reassure about the company's future. That is it for Early Edition. More surveillance is ahead. This is Bloomberg.